So moved.
Okay, second. Okay, seconded. All those in favor? Opposed? That's carried. Thank you. We are going to a presentation. We have Corey Vanderhorst, the auditor from MNP, regarding the 2015 financial statements and audit. Welcome, Corey.
Thank you. Hello, everyone. Take you through a little bit of the audit today. I'm happy to take questions at the end, get to my presentation. I'm going to start off talking about some highlights of the financials, looking at the numbers for 2015. Then we'll talk a little bit about the audit, and I'd like to end off with a little bit of analysis of the statements and looking at the statements from a bit of a different perspective. They can hear, but the internet can't.
Don't be afraid of it.
Okay. So I apologize for the turning away and turning back. It's either that or looking down and reading the whole
You
time.
could turn your podium a little bit sideways if you like, and that might help.
Yeah.
Like X Factors.
I'm an auditor, I'm not a showman. So I'll start with the statement of financial position. So the snapshot of what's in the accounts at the end of 2015. The city had cash and investments of $13.1 million and total financial assets of $14.7. Long-term debt was sitting at $1.26 million and total liabilities at just over $5.5 million. So when we take the total financial assets, subtract off those liabilities, we get the net financial asset position of $9.1 million at the end of the year. And then physical assets, tangible capital assets, water systems, roads, buildings, equipment, all that good stuff, $27.6 million at the end of the year. And accumulated surplus of $37 million. So I'll explain in a future slide of what exactly is in that accumulated surplus number. Worth mentioning that tangible capital assets of 27.6 is an accounting figure. It's a historic cost, depreciated over time. It is not a replacement value for those assets. That would be a large multiple of that number to get to a replacement value. Turning then to the statement of operations, what we used to call the income statement. Total revenues for 2015 were $9.8 million. That is an increase from the prior year and from the budgeted amount. Total expenses of $7.67, so an increase from the prior year and budget as well, and an annual surplus on an accounting basis of $2.1 million. This one's a little bit hard to see from where you guys are, but I like to show this graph to kind of show where your revenues are coming from. The big blue line on the far left being tax revenue, followed by sale of services, and then you can see it's a pretty steep drop-off to under the $500,000 mark for some of the other revenue sources. So it's really taxes and the sale of services there. On the expenses side, this one a little bit more detail there, but the big number for 2015, the largest expense category is in transportation services and roads and things like that. So as you're repairing and fixing up, that's where that goes. The second followed by general government or the administration costs. And the third one there is that pink line is water services.
Is what, I'm sorry?
Water services.
Okay.
Yeah. So the third statement in the financial statements, the third document there is called the Statement of Change in Net Financial Assets. And I just highlight a few numbers there. The purchases of physical assets for the year were $4.5 million. So that's a significant increase. The prior year was only about 1.7. So a lot more capital projects for the year. And a small amount of donated items, just over 7,000. I mentioned that the accounting surplus a few minutes ago, and I like to focus in on the cash flow to show what actually happened in the bank accounts. Take out all the accounting adjustments and the non-cash items. So operations of the city brought in just under $2.4 million. Capital, as I mentioned, used $4.5 million. And financing, there's a net pay down of just about $100,000 on debt. So the net cash outflow, because of the significant capital projects, $2.2 million out of the main bank accounts. Promised I would get into accumulated surplus and what's in that $37 million number. You can see there there's $26.3 million invested in the physical assets. There's $6.2 million set aside in reserves for future projects, future capital. There's $4 million in the operating fund of unappropriated and just about $400,000 in the operating fund for appropriated. So that's your total of $37 million. Moving away from the financials and into our audit. Our audit is complete. We're just about ready to release our audit report. It's another clean audit opinion, I'm happy to say, for the city. Just a few minor outstanding matters. The Joint Utility Board with North Cowichan, they're having their meeting on Wednesday to wrap up and give final numbers. So I don't anticipate any changes coming from that. We've had assurances from North Cowichan and their auditor that we've got final numbers, but I have to wait to see them sign off on that. And legal confirmations. As a matter of course, we're always following up with legal right up till today to make sure there's nothing new outstanding that the city would be liable for or any claims that have come through. My responsibilities as an auditor, I look at the controls in place at the city. I don't specifically test every control, but I look at the ones that will impact the financial statements. I sample transactions throughout the year. I don't look at every transaction throughout the year, just a sample basis. The materiality used in the audit was $325,000. What that means is that I looked at every transaction and balance over $325,000, and underneath that threshold, I sampled to make sure I was comfortable that the numbers were accurate. So there's no limitations placed on our audit. We had access to all the documents we needed to see, all the people we wanted to talk to. As we went through our audit, we didn't find any irregularities or anything in the area of conflict of interest or unusual transactions or anything illegal or questionable. We are not specifically fraud or forensic investigators. However, in the course of our audit, something comes to our attention, we follow up on it. We have conversations both with staff and with a member of council to make sure that we're aware of everything that might impact the financials. Throughout the audit, we discussed items with the team here today, Talitha, Peter, Marissa, and many other staff at the city. I'd like to formally acknowledge the cooperation and assistance. The audit really does go very smoothly, and there's a lot of preparation done by staff to get ready for us to roll in. Some areas that we always look at every year are the first three. We look at the financial statement presentation and disclosure, make sure it's both meeting accounting standards and providing as much transparency as can possibly be put in the statements. We look at contingencies, lawsuits, and commitments. As I mentioned, we're looking into legal claims and things that might cause liabilities for the city, and fraud and error, as I mentioned previously. The new accounting standard this year that came into effect was called liabilities for contaminated sites. So looking at sites that the city owns that are no longer in use, but which might have had some sort of contamination, whether it's oil barrels in the ground, anything else that might have leached in and be over provincial environmental thresholds. We didn't find anything. City staff didn't find anything of concern, and as we went through our process, we didn't find anything of concern. So there are no new liabilities recorded for contaminated sites as a result of this new accounting standard. Confirm that MMP is independent of the city within the meaning of the rules of professional conduct as of today's date, May 2nd. So we didn't do any other projects with the city that would impair our independence. And then lastly, moving into my financial analysis, looking at three areas: sustainability, flexibility, and vulnerability. Starting with sustainability, the degree that the city can maintain its existing liabilities with respect to service commitments to the public, the service levels you have, as well as your ongoing liabilities, without changing debt or tax burdens. And we primarily look here at comparing the total assets to the total liabilities. And we want to see this threshold be above 1, more assets than liabilities. So that ratio for 2015 is greater than 1. It went from 6.92 in 2014 to 7.66. Then we focus in on the financial assets, not just all the assets, to really give you that idea of the liquid ratio. Again, we want this one to be above 1 so that you have some money and things put aside for future projects and don't have to increase taxes and debt too much. So financial assets to liabilities has decreased from 2.77 to 2.64, but it is still above 1 and a healthy indicator that there are resources available to finance future operations. So our conclusion on sustainability is that those are healthy ratios. Flexibility, the degree that you might be able to change debt or tax burden on the city to meet your existing obligations. So we look primarily here at the debt that you have. That's a low debt amount right now. So what you see is the interest charges on that debt compared to the total revenue were 0.7% of revenue in 2014. They're down to 0.59% of revenue, so very low, below 1% of revenues coming in and going to the interest. So quite low, and that decrease reflects the scheduled pay down of debt during the year. The next one we look at on flexibility is related to the physical assets and sort of a rough look at the life of those assets and how old some of those assets are. So we take the depreciated value and compare it to the original cost. So that has increased to 52% from 50% in the prior year. Being down in that 50% range is still low. That still means significant old assets and some significant costs to replace those. But there was a significant, with the $4.5 million of capital projects this year, starts that to bring that ratio up and get it climbing. So our conclusion is the flexibility indicators are static. The interest charges are low and staying fairly low, but there are still definitely old assets there. And the costs of replacing those assets are either static or increasing. Vulnerability. One area we look at in vulnerability here is the degree to which the city is vulnerable to other sources of funding, so provincial or federal granting. So the ratio increased to 17.5% from 6.6. So that is very common with significant capital projects, and years with significant capital projects is we see the government transfers and the granting programs revenues ramp up. So the bottom there is often the case when there's significant capital projects. So not a concern. It looks like your vulnerability is increasing, and that might just feel like it's a bad thing. However, one of the best ways to get those projects done is with those other levels of funding and the grant funding. So that is my presentation. Happy to answer any questions on the financial statements or on the audit process.
Okay, great. Thank you very much, Corey. That's always nice to see a report like that, and I want to first thank our staff for the effort they put in. I know Marissa very specifically does a great deal of work in preparing the financial statements, and I know it's her favorite time of year. It is. So thank you so much for that. And so are there any questions from council with respect to the auditor? None? One question I had with respect to the flexibility, I think it was the final sort of measurement you had with, or vulnerability. So the capital assets, those relate to the government grants we received through EMBCs for dikes and that kind of thing? Was that the sort of the most, I'm thinking that's the most of the other work we didn't do with grants that I can remember, so.
I actually think that a fair bit of it is related to the small community grant. In previous years, the province paid us quite a bit in advance.
Oh, in
and
advance,
we
right.
had to receive those into revenue at the time they come in, and then we put them in a reserve. This last year, it actually went back up to 515,000, so it went back up to the larger number. Plus, we were able to secure some funds from Bike Beat towards the Active Transportation Plan grant,
Right.
so from ICBC and
Okay.
a Bike BC grant.
Great, thank you. So does that mean the province is going to be then funding the small communities grant on a more sustainable annual basis rather than I'm not sure why they were doing it, but giving us way more in advance in 1 year and a very small amount in the final year? So that it's going to a more sustainable model? Okay, great, thank you. Any other questions at all crop up for anybody? Okay, thank you very much, Corey. Much appreciated for your work. So we do have a motion here with respect to council accepting the City of Duncan audit findings report for the year ending December 31st, 2015, and endorse the 2015 financial statements.
So moved.
Moved and seconded. Any discussion? All those in favor? Opposed? That's carried. So we move to bylaws now. We have item 4.1, which is bylaw 3151-2016. This is the tax rates for 2016. And we've had prior readings to this, so this is the adoption of it. That council adopt the tax rates bylaw number 3151-2016, a bylaw to establish tax rates for the year 2016.
So moved.
Moved and seconded. Thank you. Any discussion? Hearing none. All those in favor? Opposed? 6 carried. And 4.2, this is bylaw 3118.07, 2016. The bylaw and the motion is to adopt the bylaw offense notice establishment amendment bylaw 3118.07, 2016, a bylaw to establish ticketing violations for development permit area infractions. Is there a mover and a seconder? Any discussion on this? Hearing none, all those in favor? Opposed? The motion carries. And we go to a motion to adjourn. Moved by Councillor Duncan, seconded by Councillor Jackson. All those in favor? Opposed? That's carried. So we have a little bit of time for till committee though, okay? Thank you.